we've seen premiums come down to their lowest level in more or less 2 years on most items. We've seen tremendous volume. There is an inverse relationship in the physical industry between falling prices and increased volume. And the interesting thing is that volume is always to the purchasing side. We see virtually nothing in liquidations as the price falls.
Seeing a lot of liquidation as fears of a recession continue to go throughout the economy. So with that said, good to have you on in here, and would be curious to get your update of what you've been seeing on the physical silver side this week.
Good to be here, Chris. Thanks for having me, buddy. Yeah, we've seen premiums come down to their lowest level in more or less 2 years on most items. We've seen tremendous volume. There is an inverse relationship in the physical industry between falling prices and increased volume. And the interesting thing is that volume is always to the purchasing side. We see virtually nothing in liquidations as the price falls, completely detached from what one would believe in watching a falling price. This is something that you and I discussed many years ago in your book on how when the price falls, the demand for physical increases, and typically followed by rising premiums. So, I guess the bottom line is this is a paper phenomenon, one where the paper price on COMEX controls things, but people in this industry realize that there is value to be found in these lower prices. And, if you were just simply to look at the order volume and order flow, you would never in a million years think that the price of metals fell the way that they have recently. So great volume, huge interest, did the biggest order of my career last week, and virtually nothing in the way of liquidation. So it's somewhat confusing when you're watching it from this side of the table.
And so I know we talked about this last week, but worth digging in again. What are the people saying that are calling? Are they worried that the price goes further? I mentioned earlier this week that based on what we're seeing in the financial sector, as well as the Fed hiking interest rates, certainly I see the possibility of further downside right here. And I guess that's going to differ by the person, how they view that. Some people are certainly frustrated, and understandably so, that the price is lower. Certainly better buying at a lower price than a higher price. But how do you balance all of that, and what are people saying when they call in?
Yeah, most people are actually, ironically, are optimistic about lower prices as it gives them a subsidy into entry. I think that what the market is saying is that they're factoring in or pricing in a Fed pivot where, recession looming, Fed pivots, starts to ease again and making it more accommodative for equities. But, I think the Fed loses complete and total credibility if and when that happens. But I also think it's important to understand one thing, and people talk about gold and silver having their inflation hedge properties. Doug Casey has made famous the statement that gold and silver are the only assets that are not simultaneously someone else's liability. Roy Jastrom, I believe was his name, and I think the title of the article was The Golden Sextant, something to that extent. I read it a long time ago. I believe he was a professor of economics, I want to say University of Alabama, University of Georgia, one of those two, where he came out with a study basically saying that gold and silver, well, gold in particular, will perform best in deflation, as it is not someone else's. There is no counterparty risk. There is not someone else's liability. And so if we see a recession or a depression, if we see a hyperinflation, stagflation, whatever environment we see, whether it be inflationary or deflationary, I could argue that gold and silver are going to provide a life raft of sort in an environment where, we've seen so much leverage that has pushed all the asset prices up to extraordinary levels. The contraction of credit and the raising of interest rates is as bearish for those markets as the easy interest rates and inflationary environment was bullish. So, I think this is a short-term deal and follows part and parcel with all of the other moments we've seen in past like this, where a baby gets thrown out with the bathwater and metals come down only to find a base and shoot straight up as that environment washes away. We're always told that the rush to sell liquid assets in an environment where margin calls are persistent or where things are starting to come down, they always say that's the reason we see prices fall, and maybe it is, but typically it's followed at a short period later with a huge escalation in prices. Now, I'm not saying that's going to happen. I'm just simply saying that I don't think a new narrative has been written for precious metals. I think this is just confusion by the market, and I expect to see a resumption, at least of some sort of normality here pretty soon, especially looking at the commitment of traders reports, where the commercial banks are really, really in a bullish position to see the price move forward, maybe as bullish as I've seen in quite some time in terms of their positioning. So I'm expecting this to be short-lived.